You're listening to The Whole Truth, a Resources Rising Stars podcast.
Hello and welcome back to The Whole Truth podcast. I'm Paul Armstrong. The silver price is having its day in the sun. It's finally starting to close the gap on the runaway gold price. There's two key drivers with silver: growing use as an industrial metal in the likes of solar panels, AI applications and technology, but of course its more traditional role as a safe haven asset, and that's also helping to drive the price. We talk today to Sun Silver's Managing Director Andrew Dornan, who takes us through why the company has so much to offer. As he puts it, Sun Silver is the most leveraged silver play on the ASX, and he also points out that ASX silver plays themselves are trading at great discounts to their US peers. Combine that with what the company is doing in terms of drilling to grow its already substantial resource, upgrade that resource, the metallurgy underway, and there's multiple opportunities for the company to create value for shareholders over the next 6 to 12 months. The company's been listed for only a year, but gee, they haven't wasted any time, and they're now in a position where the planets seem to be aligning, with the silver price rising, the drilling campaign proceeding at a rapid rate, and plenty of other work happening. Andrew takes us through why you might like this stock. Andrew, what a fantastic time to be in the silver game.
Yeah, I mean, silver's definitely having its time in the sun at the moment. I mean, I think our kind of long-term strategic view on it was this was going to happen. And now we're really seeing that gold to silver ratio starting to come down, but I think it's got a long way to go.
It's had a good run in the last few weeks. I think at the time we're talking now, we're up well over 36, heading to $37 an ounce. You refer to the ratio there. It was 100 to 1 a week or so ago, but people talk about 60 to 1 being a more conventional ratio. That would give plenty of upside to the silver price if we were to return to anything like normal ratios.
Yeah, definitely. And I think the ratio historically has all been kind of centred around the monetary value of the asset, whereas now we're really seeing that industrial side come into play as well, where I think the 60 to 1 is where historically it could come back to, but with this industrial side, it could go even further.
So you talk about the industrial side of things, Andrew. Let's look at that. So there's been a supply deficit in the silver market, they say now, for a couple of years, and the forecast is that deficit will get bigger, that we're just simply not mining the amount of silver that's being consumed because of this booming use of silver in technology and particularly solar panels and the like. I think that's one of the game changers, hasn't it? Solar panels have been at the centre of the silver resurgence. Yeah,
definitely. So solar panels is probably the one that a lot of investors and people know about, but there's more advanced technologies coming into play now, which is going to use more silver. One of them is the solid state batteries. Historically, the lithium ion batteries don't use near or no silver. Those solid state batteries use about 3 ounces. So if they roll out as per the forecast, by 2030, there could be 150 million ounces demand just for solid state batteries. Then we have all the AI technology. So all the AI data centers that will get rolled out, they'll use a considerable amount of silver, as silver is a noble metal. It's highly conductive. It's more conductive than any other metal. So the more advanced technology comes, the more silver will get used in these particular type of electronics and batteries.
But that's coinciding with the lack of no increase in the mine supply side of things. So the supply side is also adding to the pressure.
Yeah, correct. So 70% of the world's silver supply comes as a credit from base metal mines. So primary silver assets like our asset, Maverick Springs, are extremely rare and provide the best leverage to the silver price.
Right. So when you look at those two favourable supply demand factors, you've really got a situation that says this could actually take off. Now, it's been noted that there's been a lot of M&A in the silver space, and the great Barry Fitzgerald was writing in his column this morning that talks about how M&A is a precursor to a price bubble in any metal. It happened in gold, and he's sort of making the point that there's been a series of M&A transactions of late that would suggest that the smart money thinks there's a big price bubble coming around the corner.
Yeah, well, I think the fundamentals, silver's moving into a position being a dual role asset. It's never been like that in history. It's probably only developed over really the last 5 to 10 years. You could say 5 because that's where the deficit's really kicked in. And yeah, I mean, we spent some time in the US recently And there's strong interest from major mining companies that want to know keeping a close eye on what we're doing with our asset. It's the largest primary pre-production silver asset in the US. So if companies want to look at increasing their silver inventory, our project would be high on the list.
How do you put on a big inventory?
Yeah.
Well, let's look at that. I mean, Maverick Springs has got a huge resource. Compared to pretty well just about anything else on the ASX.
Yeah, well, we are the largest primary silver asset on the ASX. We've got 480 million ounces currently at 68.29 grams per tonne. Some may balk at that and think that's low grade, but the jurisdiction we operate in, that's actually considered really quite good. I wouldn't say high grade because that's not correct, but it's really, really, really good grade for the area. We're about 200 kilometres to the east of Rochester, which is Coeur's large silver mine. They operate at 12 grams a tonne silver. And they are extremely profitable, currently operating at about $20 all-in sustaining cost and targeting $11 all-in sustaining cost. So we're at about 5 times that grade and near on comparable resource size. And with the exploration upside we have, we feel we're going to go past Rochester in size in the near term.
So you've already got the scale, though. I mean, that those sort of resource, that ounces that you're talking about there, Andrew, it gives you scale. There's no doubt about that. You make that critical mass threshold. But you're also really, your focus is still number one is to continue growing the inventory, isn't it?
Yeah, well, I think we've got parallel pathways that we're working on at site at the moment. We've got 2 drill rigs drilling away currently. And we're targeting phased infill to get the resource up into the indicated category. Historically, there was a large portion in the indicated category, but it was pre-2012 and we were required to do some validation drilling under the JORC rulings. We've got a massive resource. It's important for us to consolidate that, undertake the infill drilling to get into indicated, further met testing, which will then dovetail into economic studies. But also we've got so much potential from our drilling last year. The resource finishes with a drill intercept of about 100 metres at 111 grams per tonne silver equivalent.
Right.
So that is on the boundary and that is continuing to the north.
So it remains open to the north.
It remains open in all directions, but the main large kind of strike area is to the north. And we can follow that another 2.5 kilometres.
And the grade's improving as you go to the north.
Correct.
Yeah.
Correct. So within some of the drilling, I think one of the drill intercepts was about 55 metres at 312 grams per tonne silver equivalent. That is a massive intercept. So we're going to continue chasing that in parallel to consolidating the resource.
So you want to grow and upgrade it.
Correct.
But because infill drilling always makes people's eyes glaze over, doesn't it? It's the kiss of death in ASX announcements.
100%.
But the truth of it is that it can create a lot of value for shareholders because if you upgrade a big chunk of this inferred resource to indicated, the value of an indicated ounce is multiples of the inferred. Yeah,
definitely. And I think an important point for investors is, given the style of this deposit, it's not a vein-hosted deposit. It's a large, big tabular carbonate-hosted deposit. So it's consistent throughout. So the spacings for infill drilling isn't like drilling out a vein-hosted deposit. So we'll be able to get it up into the indicated category for quite a low amount of expenditure.
And also it then gives people confidence that things like grade and geometry and that sort of thing tick all the boxes. The thing actually does have an economic outlook.
Yeah, definitely. And I think I mentioned it earlier, but for us, it's more Australian investors need to dig in and understand Nevada to understand the grade. Because if you're just taking a glossy look over the top of the project, it won't look comparable grades to other assets in Mexico or wherever they may be. But we sit in the right host rocks that allows us for cheap mining. It's like bulk earthworks. So cheap mining and processing is why these sorts of grades are extremely profitable.
Now, you've been doing met work, haven't you?
Correct.
To as well as upgrading it from inferred to indicated. Obviously, the market's going to want to see that this indicated resource is great, but can you get it out?
Yeah, definitely. So we've got an extensive network program underway currently. So we've been logging historical core. I think we've got about 50 holes that we're getting through, and we're able to actually select the oxide zones from within that for met testing immediately, as well as we're extracting more material as we go through the drill program, so that we've got fresher samples to undertake testing. And that'll be ongoing through to the end of the year, early next year. Some of the heap leach testing actually takes a long time because we're looking to simulate a real life heap leach scenario. So that can take 3 to 4 months because silver leaching takes a lot longer than gold. So we need to ensure that we're giving it the right amount of time to get the best recovery.
So the results are bulletproof. So as well as trying to grow the inventory, you're trying to upgrade it, establish the metallurgy, the heap leach process will work for you.
Yep.
And that what presumably will all feed into some sort of economic study.
Yeah, so we're targeting to undertake a scoping study kind of second quarter next year. At that point, we feel we would have got enough data from the met tests. We're looking at all different types of processing. We're not closed off to any pathway. The way we see it, silver price is supporting many different processing pathways now. And what we want to ensure is that we don't leave any value on the table. So if that means a little bit more capex up front to recover a lot more ounces, then we may look at that. So we'll be looking at doing process flow trade-offs early next year. Then that'll feed into our studies kind of second quarter next year.
So what will happen between, say, now and Christmas in an on-the-ground sense?
So we're drilling, so extensional drilling, infill drilling, also obtaining met samples. One of the key things we're also doing is we have mineralisation that trends to surface. So we're also we'll be coming out with a secondary mineral resource, which will be a from surface mineral resource. The grade's a bit lower than the resource underneath. So we're going to segregate it as 2 separate resources. And that's key for us in revenue from pretty much immediate mining, which will allow us to offset any pre-production capital we thought we were going to have for pre-strip. So now it's looking like we'll have revenue near on immediately.
Right. So there's various avenues of shareholder wealth to be created between now and Christmas. Are you trying to advance each of these work streams, in parallel, so that you would think over the next 6 to 8 months, if the tailwind continues with the silver price, you should do well. Shareholders should do well.
Yeah, well, I think even as we stand today, if the silver price didn't move and we continued to advance on the resource we have, we're still probably the best leverage play to silver on any exchange globally. I think we traded about 16 cents per in-ground ounce value US. The average on the ASX is $1, and on the North American exchanges it's $2. So
that's an important point, isn't it? Because there is still a big gap between the ASX valuations and the US valuations. The Australian market still coming to grips with silver. It hasn't been people here in Australia, the investors aren't as familiar with silver as they are in the States.
No, and I think it's an interesting one because we dig into it quite a lot, because being the major shareholder, my key driver is maximum value, smart deployment of capital. So we've looked into why the US trades at such a premium. But I think it's the understanding of silver and the sophistication over there. In Australia, there's near on no primary silver assets, whereas we have hundreds, if not thousands, of gold projects. So Australians are very attuned to high-grade gold, and that's kind of the thinking. Whereas in the US, a lot of investments in Mexico where a lot of silver assets are. So there's another level of sophistication. Institutions love silver, and it just gets better trading volumes. But I think, like anything, once the silver price gets the tailwinds behind it, which we're seeing now, everyone will soon follow and understand it.
Undoubtedly. I mean, sure, people here understand gold.
Yeah.
First and foremost in Australia, Australian investors are very familiar with the gold. They're familiar with copper. But if you look at go back to the lithium story, when go back 6, 7, 8 years when lithium started, the Australian market knew nothing about lithium, and yet people soon got their head around what was good, bad, and indifferent. And certainly there was no lack of appetite in those days to buy lithium stock. So sooner or later, capital will gravitate to where it gets the best return. And indeed, if silver stocks here are trading at a big discount and silver's hot, people say, well, in the States, these things are getting fully priced. But hey, if you go down under, there's a lot of cheap silver to be had on the market. That differential can only last so long.
Yeah, definitely. And yeah, I think lithium's a good one. Everyone loves the green energy, advanced technology theory that's coming in, and it's just getting the story out so investors understand silver is not too different to lithium in its uses in new technologies, clean energy and the likes. But separate to that, you've got the monetary hedge in uncertain times. So in my view, any way it goes, you've got multiple levers that silver can pull going forward.
The monetary hedge is getting more recognition now, isn't it? I mean, going back to Barry Fitzgerald's column that he published this morning, he makes that point that actually silver is now getting some recognition as a precious metal, a store of value, aka gold, that it really hasn't enjoyed in the past couple of years.
Yeah, definitely. And I think that you look at they say it's the cartels always suppressed silver because it's for years and years it's been manipulated, but it's hitting that point now where a lot of banks and a lot of governments are looking to actually take their silver out of the likes of the LBMA in London and actually physically hold it in their own kind of hands. And that's creating this potential issue where there's not enough silver in the LBMA to actually fulfill what people own. So, it's definitely a time that I think people need to be open at. Silver was a particular way historically. To me, that's changing, and the whole landscape going forward is I believe, this is my own personal view, you'll see silver become a critical mineral globally within the next 10 years.
Yeah, so the dynamics of the market are changing drastically.
Yeah.
Yeah. Well, Andrew, it sounds like your Sun Silver's certainly, as you said from the outset, getting its day in the sun. It's the planets are aligning if we can mix our metaphors out there a bit. But we have a situation where the silver price is looking good. Most experts are tipping further growth, both as a store of value and industrial use, and certainly with your drilling to grow the resource, upgrade it, the network, you're making your own steam out at Maverick Springs. So there's plenty there for shareholders to think, hey, there's multiple sources of value creation coming here, and a little bit of a tailwind from a further rise in the metal price and up and away.
100%. I think we're 1 year into our story, and it's all kind of coming into play how we wanted it to, and I think we'll definitely see a re-rate in the near future, and it's an exciting asset, and we're excited that what we've got ahead of us. So yeah.
Great. Well, thanks very much for joining us today.
Thanks, Paul. Appreciate it.
You've been listening to The Whole Truth, a Resources Rising Stars podcast, produced by Resource Media, hosted by Paul Armstrong for Reed Corporate. Please note that Reed Corporate does not provide investment advice, and investors should seek personalised advice before making any investment decisions.